How's it going everyone, Mario here. We have a lot of stuff to cover on this video. In the market commentary section we will talk about, is the recession over? Why is the market going up in other direction up north? In Fed Daily, we will address some of the ridiculous articles that's been floating around saying Fed has already done enough. Why? Is your fund getting close to margin calls so you have to pull some shit like this to prop up the market? We will also go over the technical analysis on SPY and we will see what to look for in upcoming week. Is the so-called rally what we are having right now have more juice left on the tank? Or is this a good opportunity to load upon puts? Is the recession over? Markets had a great last week. You should see all the headlines that's been popping out on CNBC, Bloomberg and other media outlets. Absolutely outrageous. Go something like, inflation expectations coming down, recession risks are low, Fed has already done enough. Absolutely outrageous. Comes to show not to trust these fuckers cause they'll be changing the narrative every single day depending on what the market does. When we have a green day, the headlines will say, investors digest the Fed hikes. When we have a red day, headlines will say, investors are spooked by Fed. But what's really going on? We will start with the existing home sales data. We were down 16%, huge drop from the previous data. Not a lot of people want to buy houses because the prices are ridiculous and the mortgage rates are sky high. People stepped away from buying houses because of the mortgage rates and prices of the house in itself. That reduced the demand by keeping the supply high, which in turn got the mortgage rates lower. The so-called analysts got gassed by looking at this data and came to a conclusion that, hey, Fed did their thing, the demand is slowing, inflation is defeated. Absolutely mental. We have on one end, inflation is sky high. On the other hand, growth or demand is slowing down. Well, we call this stagflation, which is the base case. So, if Fed decides to slow inflation by increasing the interest rates and we have an economy which is already slowing, we will have a recession. If Fed let the inflation go for a while as this idiots in media says and then decides to pump the brake later, it's gonna have even more worse catastrophic impact on the economy. There is no soft landing in here. We are just in the beginning of something worse to come. So I would suggest not to fall for the stupid headlines which the CNBC and Bloomberg gives. Instead, go ahead and read the report from the official website of Bureau of Labor Statistics or Federal Reserve in itself. With that being said, let's move on to the next section of the video, Fed Daily. We got to address some of the ridiculous articles that's been popping up lately. Articles like this, Fed has already done enough to reduce inflation. Really? I want the same shit which they are smoking to feel how it really is in your head to be making statements like that. I had an interesting conversation with a restaurant owner a few days back. He left a note on a drive-thru saying he got to increase the prices of some of the food by a few cents to stay in business, as his suppliers are taking advantage of the inflation to increase the prices of the meat which he is receiving to his restaurant for the third time in the past 2 months. Fed has done enough, really. All you gotta do is either own a business or talk to people who actually runs a business to actually know the current state of economy out there. Few months back when we had a back-to-back increase in the CPI and the inflation data, these are the same idiots which came out of the woodsheds to tell us one data is not enough to come to a conclusion. But hey, one data of slowing home sales and inline PCE will make them jerk off. There is no mention of recession in Fed minutes which we got on Wednesday. What recession? We don't see any recession. If Fed did the mistake of not increasing the interest rates and kicking the inflation to the curb right now, we are going to have a very tough 2023 and 2024 ahead. That being said, let's go over the analysis on SPY. SPY had a pretty decent reversal from $380.59, tapped into the bear market territory and reversed big time up north far away from that price. Rallies like this were pretty common in bear markets. After 6 weeks of consecutive losses, reversals or a few good weeks are expected. But remember, the trend is to the downside. Nothing has changed from the fundamental point of view to gas yourself and go all bullish. Leading into next week, let's start with the weekly charts. The average true range is at $17.50, which means this short week is either gonna push us all the way to 432 up north or run a test to 400 by end of the week. Now moving on to the daily charts, 416 is an important spot to keep an eye on. Opening above 416 opens door for running a test to 418 and the big fat round number at 420 up north. Above 420, the negatively sloping 50 SMA will start to act like a magnet, which is currently sitting at $427. Below 416, we are watching 414.50 and 411.50 for support. Below 411.50 opens door for running a test to 408 and 405. As always, members of the Discord and members of the Patreon will be getting updates on daily basis in SPY and QQQ before market opens every single day. If we close the week below 400, it's gonna raise alarm bells. If you are a bull, be very careful. Remember, the trend is to the downside. The bounces like this are pretty common in the bear markets. Counter-trend rallies are oftentimes get sold into than warranting more buying. There is no signs of reversals yet in the charts. Until you see the reversal or rejection from the levels mentioned above, stay bullish. Take high probability trades, manage the risk wisely, join the Discord, join the Patreon, link is down below in the description. I'll see you guys in the next one.